Excel accounting practice problem. Create reports after second month of data, month of February only. Get ready, because we're about to excel. Here we are in our Excel worksheet. In prior presentations, we put together the Excel worksheet from a blank sheet, continuing to enter transactions into it. If you have access to it, there's two tabs on down below, an example tab and a practice tab. The practice tab starting out where we left off last time, the example tab in essence being an answer key. Let's take a look at it now. So last time we created our financial statements for the year to date, the 2 months that have passed in our practice problem. Now we're going to be creating the financial statements for just the 1 month of activity, the month of February, the balance sheet remaining the same, the difference being on the income statement and statement of equity. Let's see what that difference looks like as we practice the practice tab. Going over to the practice tab, let's do some cleanup work. I don't need any of the journal entries, so I'm going to hide from the skinny Y all the way over to the A to skinny Y. Why? Because that's where it happened to land, and we're going to hide those. And then we're going to hide, I just want the month of February column here, so I don't have any other things that can confuse me, because I get confused fairly easily. So we're going to go from double A to AC, double A to AC, right click and hide that stuff. And then I unhid it, hide that stuff. And then I'm going to hide the AE because I don't want the year to date, just the month of February in AD. That's what we're going to add to the financial statement. So we're going to right click on this one and hide it. And then let's go from the skinny all the way over, remembering that I do want a skinny on this side because I want one skinny. I don't want the financials right next to the trial balance because then they get uncomfortable. The two get uncomfortable when they're that close. They need some space. So we're going to go on over to this one. Well, let's go right past this one to here. There we go. And then we're just going to make a new one. But no, let's go to this financial statement first. Sorry about that. And we'll go to the skinny right there. Okay, right click and hide. This is what we did last time. So what I'm going to do is copy the outline of this so we don't have to re-input all the accounts. And then we'll change basically the setup of it. Now I can't cut and paste it. I can't keep the formulas really going to the exact same place very easily, but I could just copy the outline. So I'm going to go from GZ, going from GZ. Actually, let's copy the skinny too. Let's copy the skinny. So we'll copy the skinny all the way over to the statement of equity. I'm going to right click and copy that, and I'm going to paste it on this skinny. Paste it right there. So now we've got kind of the outline, the formatting looks good, but we got to re-input all the data into it. So now let's hide the last financial statement stuff. We could go back in through this, by the way, and copy and paste, say values only, but I'm going to recreate it so that we could pull the information from the trial balance and see exactly what is going on and what the differences are between the year to date and the current month. So we're going to hide this stuff. Hide this stuff, and let's hide this one. We don't need the statement of equity too. Statement of equity, gonna hide that. Okay, so finally, we have our information here. So now let's delete. I'm gonna delete what's this stuff because it's not giving me any data, and I'm gonna delete everything that's not quite working out for us here. So we'll delete that, and let's delete this stuff, and then this one I'll delete, and this one, and then we'll just reconstruct it. So the current assets is everything from the checking account on down to the furniture and fixtures. So I'm going to do it this way, just say equals the checking account, enter, and then I'm going to go to the left hand side and say this equals the 95,944. I'll take those two cells, which are nice and formatted for us already, and just copy them on down like so. Let's put an underline under this last one, font group and underline. That adds up to the sum of 134,866. If I add up these, it also adds up to 134,866. So it looks like we are on the right track. The property, plant, and equipment, we had that added little wrinkle of how we're going to format this one. We're going to do it this way. I'm going to say we got the furniture and equipment equals the 98. And then I'm going to take the accumulated depreciation, ACC depre, the 7,005. Note that if you're making the financial statements for external use, you want to consider how exactly you're going to present accumulated depreciation, a full word, an abbreviation, and so on. And again, how you're going to group these types of accounts. Also note that you probably wouldn't want to be displaying zero balances. You'd probably want to be combining together the checking account and undeposited funds into an account possibly called cash and cash equivalents. You wouldn't want the zero down here. These are types of things that will be differing when you're thinking about creating financial statements that can be constructed directly from a trial balance as easily as possible and be able to be changed and manipulated as you change the trial balance, compared to a situation where you're making the financial statements for external presentation purposes, where you might do some more condensing. In accounting software, remember, you could do some of that more condensing within the software, meaning you could, for example, make a account category and sub-accounts to collapse these if you so choose. But even in the software, oftentimes when you want to do a formal compilation or something like that, you often have to export it and still do some more adjustments because, for example, things like the undeposited funds in the checking account will be under the name of checking instead of cash and cash equivalents and so on. So typically, even in accounting software, when you're actually doing, presenting to a bank or something like that, you may need to do a little bit more cleanup work in order to condense your accounts to the format that you think would be best presentable to the financial institution or whoever you're presenting the financial statements to. Okay, so then we're going to go to machinery and equipment. Machinery and equipment and accumulated depreciation. We'll pick up the 5,000 and the 0 here. And then notice that the contra asset turned out to be a negative number. That's fine because I want it to subtract because it should be decreasing the assets. I'm going to sum up. So this is the book value on the right-hand side. No change here from the year-to-date numbers. The balance sheet will basically remain the same. So there we have it. If I was to add these up, these items, they add up to the 95.5. There's the 95.5. If I add up all the assets, they add up to 233.66. There's the 233.66 right there as well. Let's go on over to the accounts payable. And we've got the current liabilities, which is the accounts payable going on down all the way through. We're going to copy all those all the way down. I'm going to put a negative because I want to flip the sign, not having the negatives over on my financial statements because they're in a plus and minus format, using the accounting equation, not debits and credits over here, to represent the double entry accounting system. Copying that down, there we go. Let's put an underline under the 0. Double clicking on this, that looks good. And then I'm not going to put anything into long-term liabilities. I'm going to keep that placeholder at 0. So that when we do our adjusting entries, we can then make an adjustment for it. If I add these up now, adds up to the 82,516. I can give a quick double check because I formatted my trial balance exquisitely, just exquisitely, I might say, because why not? It's the truth. It was exquisitely formatted, unlike other formattings you'll often see. And so then we're going to take the negative sum of all the blue stuff, and that should put us in balance again, back in balance again. So there's the 233.66, and it matches out, same kind of format that you would see from the year to date. Let's take a look at the income statement, which is going to have some differences to it. So I'm going to take the skinny here all the way to the HV, right click and hide, and let's take a look at the income statement. I've got a statement about income I'd like to make around here. We're going to delete this stuff. Let's delete this stuff. And then we'll replace it. And this stuff. Okay, so then we got the revenue category, which is just going to be equal to the 3 revenue accounts we have. Starting down here in the equipment rental. Notice, by the way, that net income now we can see is going to tie out to a loss here of the 2473. So that's what we expect to happen because, again, of the exquisite formatting of the trial balance makes it so easy to see with such a simple formula. It's just incredible. So then let's copy let's take the negative of the revenue number down here of the 2260, and then we'll pick up those two and just copy them on down to a few cells. There we have it. And then if we sum that up, there's our revenue number, the 14,854. We could double check that on the trusty TB by just selecting these 3. And there's the 14,854 as well. Then we're looking cost of goods sold for our subcategory. That's going to go right here. Cost of the goods that we sell is going to go right there, so we can get that stop along the way to net income of gross profit, that sub-calculation on the way down to the destination of net income. So there we have it, and there's our gross profit, the revenue minus the cost of the goods that are sold. Then we've got all the other expenses, the normal expenses, which within the QuickBooks software, if you're using some kind of software, would just be the account type of just a normal expense. We'll pick up the internet, that's where they start out. And then I'm going to put the amount over here in HY column in the internet 180. Let's copy that down, selecting those cells, copying it down, noting that we do have a 0 here, and that's fine here. But again, if you were just to display it elsewhere, you'd probably want to remove the zeros. Accounting software does have an option oftentimes to show the items that have activity in it or not. So if there was a 0 account in like accounting software, it might be able to remove that automatically. But again, even still in the expense side of things, accounting software may allow you to use subcategories to condense the income statement for presentation purposes. But oftentimes you might need more condensing possibly that you can kind of work on if you were to display them externally in like a formal fashion. So we're going to go to the font group and underline it down here. That's going to be all of our expenses. So that went from here, internet, down to the utilities, adding up to the 8669. 8669. So if I take my gross profit minus the other operating expenses, we're at now the 2127. That's not an income, it's actually a loss. So let's add loss here. Loss, and we can see that if I was to just select these on down, not including the last two down there, we've got the 2127 easily checkable on the trial balance. Now we're going to go down to the other income and expenses, and we'll just pick up these last two, which aren't part of our normal operations. These are kind of strange things, meaning we had the gain on the sale of investments, but we're not a finance company, so that's not something we expect in the future. And then we've got the interest, which is, and I'm going to say negative of these amounts, negative of the 250, and then negative of the 596, because you'll recall that these two items down here, I want to show the other items instead of having two other categories of other income and then other expenses. I'm saying other income and expenses. So that means that the income I want to show as a positive number, the expenses as a negative number since they're in the same category. And then if I add them together, we got the 346. Let's put an underline under that one. Underline under that, and then we're going to take then the 2127 minus the, actually plus, summing these up, we get the 2473, and then we could double check that 2473 by it being our bottom line number on the net income of our exquisitely formatted trial balance. So then if I highlight these, you can also see that there's the 2473 and that way as well. So now let's do the statement of equity. So the beginning balance for the equity now is now at, I'm going to say this is going to be negative of, this is where one of the major differences is going to be. It's starting now at the 85,323. That's different from the starting point at the beginning of the year. So this is where one of the differences are at this point, because we closed out the first month into the equity in terms of the income statement. So we've got the 85,323, and then we have the net income. Well, let's pick up, we got the investment from the owner of the 65,000, which is still out here. Now notice that 65,000 was actually invested in January and should have rolled into the equity, but we didn't roll it into the equity. And so that's part of the system, that if you're going to break out in your equity, like having multiple equity accounts, so sometimes you can manually close them out like a draws account and the owner investment account into equity. Otherwise, you can keep them in there and you can see the equity over the life, But when you make your formal financial over here, we might then say that this should then be equal to the owner investment of that, and the equity should really be owner investment. After closing those two out, it should be the negative sum of these two, because the owner investment didn't happen in the current period. It would basically roll in to the equity. So let's pull it into that. And then that's going to give us then our net income is pulling in from down here. So that looks good. And so then if we were to add this up, here's our ending equity at the 147,850, which we can double check over here by simply adding up all the blues, all the blue. 147,850. We should also be able to tie that out to the balance sheet. So let's do some unhiding to clean this thing up. I'm going to unhide the whole thing. I'm just going to unhide, and everything has now been unhidden and revealed to the world. So now we're going to say that this amount right here, instead of pulling it from the trial balance, let's pull it from this item up top, the 147,850, and that still puts us in balance. So then our check figures here on the balance sheet, the assets equal the liabilities plus the equity, of course, and then we've got the net income is feeding in, which is a loss. It should be net income, let's say loss, like so. Let's make it a capital because I think that's consistent to what I've been doing. And then the 2473 net loss in this case is going to be over here in the statement of equity, and then the ending equities at the 147,850, which should tie in to the balance sheet on the equity section 147,850. Now again, the things that of course are different here, the assets and liabilities are the same on the two balance sheets for the current period and the year to date, the 1 month and the year to date. The differences, of course, will be in how far back we're looking from that point in time. The income statement then looking back 2 months. So here we have 2 months of data where we have a net income. We reconcile that to the balance sheet by then looking at the beginning balance before the 2-month time period, which you can think of the balance sheet as assets minus liabilities equals equity. Kind of like the bottom line of the balance sheet. In essence, you could think of it the net worth in essence. And so that's what it was before. And then we have the changes to it, including net income and the investment. And there we are at the end versus in the current month, we had the same balance sheet, but then we're only looking back 1 month. So in this case, we only had 1 month of data on the income statement. We actually had a loss in February 2004.73, and we reconcile that to the point in time on the balance sheet by taking a look at the beginning balance, and this includes the beginning balance after we put in the investment and the beginning balance for starting at the end of January or the beginning of February, and then we're going to say what happened from that point in time. So we're taking basically the bottom line. You can think of it as the balance sheet, assets minus liability, the equity at that point in time, at the beginning point in time, which in this case was the end of January or February. Then the activity was a loss to get to that same ending point, because the ending point is what the balance sheet is, a point in time, 147,850. Now this can be done with accounting software by simply changing the dates oftentimes, and the accounting software will help you out to roll in, close out the income statement accounts to the balance sheet accounts and so on. But some accounting software like a QuickBooks will kind of cheat without putting this equity section in, which could be a little bit problematic, but also can be helpful sometimes, and they'll try to put the net income down here in the equity section. You got to be careful when the software does that, however, because it doesn't often always close out each period on a monthly basis. It kind of looks at it on a yearly basis when it adds the net income into the equity, even if you change the date ranges. So you got to get a feel for how the software is going to kind of do the closing out process when you run reports for different date ranges. But the ability of the software to be able to run a report like an income statement for the current month versus the year to date and so on is, of course, a level up than what in a database program like a QuickBooks that you can do generally in Excel software where we have to do something like this. We got the 2 columns on the trial balance, and we've got the income statement that we had to do twice in order to see the 2 comparisons. That's where the database programs really shine.